I was talking to Sandy earlier. I don't think that's the smart way of going about doing it, trying to choose a stock that's, that's 10 or 11, 12, $15 just because it's cheaper. You still want to select quality companies, obviously, but I did try to find a range here of that. So, and like Sandy said, I do have some that are just the sector ETFs, like XLC, telecommunications, XLY is consumer discretionary, and then XLRE is real estate. And then I also had, I think I had IWM in here. I hope that's the Russell 2000. That's probably the most liquid one that you can trade in as far as options. You have Monday, Wednesday, Friday expirations date with that. So that one's a really good one. I also have the SPLG in here, which is the S&P 500 index, but it's, I didn't put the SPY in here because I know you could throw the SPY in here if you wanted to, SPY, but I know it tends to be a little bit more expensive for people. But SPLG's the S&P 500, but it's a little bit more affordable. So
let's see here. So I'm gonna shoot.
And maybe while you're doing that, maybe I just talk through. So one of the things with the wheel, people can have questions for me, but you got to be patient with the wheel. Obviously the market is, rallying kind of like what we did from June to August. And the S&P 500 right now is approaching its 200-day moving average. And we may come off of that and then pull back down. So you need to be patient. You typically want to sell, you always want to sell puts on down days. In my opinion, you want to find support levels, and you want the VIX to be higher. That's the volatility indicator. I think everybody knows that, but those are the things that I look for. So you want the VIX to be higher, and you want a good pullback. When
you say
puts.
the VIX to be higher, do you have something in mind?
I do actually. So if you pull that up real quick.
Yeah. It's right here on the label.
Okay. Well, yeah, I'm at the chart, but that's fine. Sure. So literally I would be looking for it to go back up above 26, 27. I think there's some moving averages right around there.
Okay.
Let me see if I can. Yeah. So that's the way I would like for it to be at least above. Let's see. Yeah, you got it here. 26, 27.
That's exactly.
Personally, I mean, it'd be nice for it to get back up to above 30 if you're a premium seller. But I wouldn't wait for it to just be above 30. I'm just saying that we are getting down to levels, as you can see here. Now if you scroll back out, Sandy, the other way, look what happened in June there. In August. I mean, you had the VIX that got pretty low. So, we could still keep going, but you don't want to be selling premium as much down there, right? That just makes sense, right? So you want the VIX, and typically the VIX, of course, goes higher when the market pulls back and there's uncertainty and there's volatility. So.
Right. So let me just clarify. This is the VIX chart, and it is the fear gauge. And what he's saying is not selling down here is because, see, this is support. And so, if we get nervous, as the market gets nervous and, rises, as an example, you're saying this is a great area, basically, or right now, the 26 to 30 range is a great area to sell puts. But here, because it's the support level, you're saying no right here.
Right.
Okay. Does anybody have any questions about what he's saying in regards to the VIX and selling puts? Now, the first thing that we haven't talked about is just really establishing shares, right? So the first thing we need to do is actually buy shares. You have $30,000, you have $50,000 in a simulation account. The first thing that we're going to do is be looking at, and he created a list for us. And that list really being, I was actually surprised to see CRM on there. Is that
that's right? Not a dividend stock, but it has really good premium from an option standpoint. That's why I included it in there. And I do think I think it is more stable.
Okay.
Good catch, Sandy.
Yeah, I was
And
surprised. I was
Boeing.
like, really? CRM is in there? I mean, gold, really Yum Yum, the company Yum Yum Donuts or whatever,
Oh
Yum
yeah,
Yum the brand.
Yum's a quality company.
Wow, didn't know that. Ben, let's walk through these really quick. SWK, is that, what is that?
So SWK is Stanley Black and Decker. It's a
Okay.
dividend king that's really struggling right now. As you can see, it is literally down 55% this year. Now you might thinking, what are you talking about? But this to me is at the level now. It had decent earnings here recently. They've really had to revise everything with inflation and all the concerns. But this is a quality dividend stock, and you're getting paid, right now to on a company that not only increases its dividend, but they actually increase it more than 8% on average. So you got a quality company here. And in my opinion, we're at pretty low level. So this, if you're going to sell a put on this thing, you would want to wait for it to pull back again on a down day. And you could see where those levels that you're showing there, Sandy, you
Yep.
could get pretty safe there. Like I had one at like 75 would be a good place to sell a put, in my opinion, on this one.
Okay, so not too far off here. So we're looking at maybe a couple day pullback. That could be relatively quick in our market based on a news event.
Right.
So you're really looking at, and this actually is going to be coming up on a weekly level into resistance at around 90 for that.
Exactly.
Okay.
Yep.
So basically then as we go through these lists of stocks, everyone, our job now is to pick, right? So as an example, if I have $50,000 in a portfolio that's an IRA floating around, you're thinking about me maybe spending $10,000 on a simulated account individually on maybe 5 stocks. Is that what you're recommending?
Yeah, I'd say 3 to 5.
Okay.
Yep. And the nice thing about this one, in my opinion, is, again, you could get pretty safe with this one. The options change pretty good, and you'd only be, $7,700. I wouldn't be selling a put at 80, quite honestly, but I would at 70, 75.
So you're really looking for at least a $10 pullback on this stock.
I think if it got to 80, like if we had a down day and it got back to 80,
Yeah.
you could probably then sell a put at 70 or 75 and get pretty good premium for it. I'd go about 30 to 45 days out on it.
And then let's talk about that for a moment, because you just throw this out because it's so, it's very easy for you to, in your mind's eye, to identify where you're going to be selling that put. So I just made an alert for myself that, hey, when this gets to about 80, that's not a bad area to sell a put. Now, what kind of put am I selling? You said 30 to 45 days out.
Yeah. So you'd want to, I typically like to go a month,
Okay.
30 to 45 days out. And the reason why I choose that is that doesn't mean you're going to be in the trade that long. I typically take those off. I mean, you can take them off in 2 or 3 days, depending on what happens. And I typically will sell a put 30 to 45 days out. Tastyworks had done some analysis on that, just so you know that they said that kind of the sweet spot is 45 days for they back tested it and said that, if you look at selling options weekly, twice a month, 30, 45 days, the sweet spot, according to their analysis and my experience, has been somewhere between 30 and 45 days. But that doesn't mean it'd be on that long again. So that's what I'd be looking to do on that one, is 30 to 45 days out, and, getting down to, the low 70s on this one. And you get a nice dividend if you were assigned it, right? So
Okay.
then you turn around and sell a call on it.
And that's what you're doing, is you're waiting for the market to go high, and then you're selling a call. And then when the market pulls back, then you're selling a put. And so you're just really kind of going the opposite of what the market's doing,
Right.
because you have that time on your side, and you're selling premium. So you're selling time.
Now, when we do this, when I simulate it, like let's just say that today was a really good day and we had a really big down day and we started selling puts. The minute that I sell a put, I go in and I put in a limit order to buy the option back at a 50% profit. I do that immediately. That keeps everything passive. I don't have to watch it. And so literally this has happened to me like 2 or 3 days later, I wake up and, 2 hours into the market, I hit my 50% profit. So you'll want, so when we do these simulations, Sandy, we can do that too. We can put limit orders in because that is exactly what I do. Now your profit target could be higher than 50. And I do have some, as for those that watch my video, I have 2 different strategies, but I sometimes want a 75% profit. So whatever your profit goal is, that's what you'll want to put as a limit order. But you want to do that immediately you put it on.
Oh, it's interesting. Okay, so you're not waiting any time then. As soon as you sell the put, you're programming your order to take your profit.
Yep.
Okay.
Keep it passive, and it's really no reason to not do that.
All right. And then now, why isn't this a good time, if you don't mind me asking, to sell covered calls?
No, this is a good time to sell covered calls. In fact, if y'all have been watching my wheel channel, that's what I've been doing today. And I sold one on Microsoft today. So you definitely want to sell cover calls today. And that's what I've been doing the last 2 days. So cover calls when the market's going up. Again, in my dividend portfolio, I do it strategically. But when I'm running the wheel, like what we're talking about here, you definitely want to take advantage of these up days. And like, for example, we're looking at SWK here. I actually have 2 cover calls on it right now, personally at $80. So I'm sitting pretty good. I'm going to make, I think it's $500. And this thing will get called away at $80 potentially. My expiration is in December. But if it doesn't, if it comes back down, say it goes back to 75, then I would turn right back around and sell 2 more cover calls at 80, because my cost basis, what that means is that's where my shares got assigned, is at $80. So I am selling cover calls, and you want to sell cover calls in up days.
Okay. So because we talked about selling the puts, I just want to clarify the reason why we're talking about selling puts is because we haven't established our accounts yet with shares.
Exactly.
And so normally a person like myself, who's got some IRAs floating around, we just go into the platform and buy shares, just outright, whatever the cost is. But that's not what we're doing here. We're doing everything very strategic, like Warren Buffett. And so what we would be doing is selling puts on a down day. And we're doing this in order to get our profit or to get our shares first. Should we worry about getting our shares right now?
No.
Oh, that's interesting. And so that's why, for those of us who don't have any shares right now, we're unable to sell those covered calls because we don't have our accounts.
Shares, you don't own the shares yet. So if you sold a call, that would be naked.
Right. And we don't do that here.
No, I wouldn't do that.
Trading Made Simple. So, all right. So the first thing is everyone knows that today is not a good day to establish your account by buying shares outright at whatever the share price is. We actually have to do this strategically. And in order to do that, we're waiting for a down day. So maybe then what we do is on a really good day, that's a down day, we'll let everyone know in the channel, hey, we're going to be meeting up to sell some puts on some of these stocks that we choose so that we could actually obtain shares that way. Is that correct?
That's a great idea. That's
okay.
And if we have the flexibility to do that, like on a really good down day, we could jump on and then we could talk about it. I can get, what I'll do is I think Sandy's going to create another place for me to post these dividends where people in my wheel channel right now, there's a lot of discussion, but I will continue to post really good stocks that I believe to do the wheel on. And it's a lot more extensive than what Sandy's showing you here.
Yeah. So. And I think what, while conversation is going on in the channel, a lot of his posts with that information is getting kind of just, hidden with all the chatter. So we'll get up another channel for him where it's just posting materials. And then on a down day, just have a heads up that when we have a down day, we're all going to meet up here so that we can actually start. He can actually, advise us where's a good level at selling some puts so that we could actually obtain shares. I've never done this before. So I just want to let you know that I'm just as nervous and apprehensive about it. But since it's going to be in a simulated account, it won't be a big deal if I make a mistake. Okay. And you too as well. So we want to get good at this so we know what we're doing so that we could actually do this in a real account. But it does at first sound kind of confusing. And so I'm just now getting a handle on it. So I hope you guys will come back on a down day. We'll talk about it. We'll certainly advertise it so that we can jump in. So let's take a look at those. Because I know that you have a larger list, but as we just take a look real quick at this list that's on here. I don't know why that just keeps moving all the time. Let me see if I do it here.
Maybe pull up Coca-Cola, or if that's what you were going to do.
Yeah, I was actually just going to let everybody see.
Oh, okay. No,
Also,
that's fine.
it's also in the chat as well. But here's the kind of abbreviated list that what we were looking at. And so if you guys can jot that down or take a screenshot, it's also in the chatter, in the chat box, so that you have that list. And then he's going to create maybe a more detailed list if there's nothing on here that suits your fancy. As far as I'm concerned, I mean, you have the banks, you have the communication sector, you have Coca-Cola, which is staples. You do have some discretionary. You got Starbucks, not my favorite. The banks, the gold, Apple, Walmart. I like those.
You got Leggett and Platt, which is really solid company. It's a consumer cyclical company, but Starbucks is actually, I think a lot of people are really bullish on it though, just so people understand that.
Yeah, with China, I guess, opening up and stuff, Starbucks to me, the joke is in Discord is, whenever I make a trade on Disney, Oxy, or Starbucks, it never ends up working out. So,
that's funny because I posted a profit in Disney today.
Did you really? Well,
yeah, so let me just real quick. So
Sure.
when they announced earnings a couple of weeks ago, they had a big down day, right? And so I immediately sold a put at $80 and then took that off today for, I think it was for $164. I think I actually posted that one in the channel. So you just got to take advantage of those down days, and so often what happens is people overreact to earnings, and so you can really benefit for it. And I think I had that trade on. I mean, it was really, really quick trade.
So this is going to go against kind of, a day trader's, it's going to go against the grain here because, we're usually trading the trend. And in this style of trading, it's really, you're trading the opposite. You're being, what do they call that? A contrarian, is that correct?
What? Well, yeah,
Contrarian.
I guess. I mean, it's more swing trading technically, right? Because you're holding it overnight if that's where you're going with there. But yeah, I mean, we can sit here and argue back and forth on Disney, but Disney's making billions of dollars.
Oh,
Okay.
no, I'm not arguing at all.
I think they're going to be fine long term. So that's why I felt comfortable selling a put on Disney at $80. But you got to choose those quality companies for sure.
Yeah, I think until we actually get our cost basis, right? Where everyone's getting basically their shares at, or they get put their puts, so to speak, and they get their shares or assign the shares. We really don't really know, like, do we have like a 20 delta, 30 delta? Is there a delta that you use when you're selling the covered calls or the puts?
So on the puts, I look, the first thing I do with puts is I do what you do, Sandy. I pull up the chart and I look at the chart and I look for support. Okay. And then I'll go out to the options chain. And what I have found is typically where there's support. And I actually personally, when you're doing the wheel, there's different ways to do this. But if you really want to, still get decent premium and avoid assignment, you're okay if you get assigned, but you want to have like at least a 75% chance of not. So you want to sell at a 25 or a 20 delta. You can go below that, but you start going below 20 delta, I would argue that sometimes the premium doesn't justify the risk of the trade.
Now,
So
is this
typically,
after you've already gotten your shares though, or?
no, this is when we're about ready to establish. So we're going to sell a put.
Got it.
Like, let's pull up the SPY real quick.
Yeah,
Yeah, you got it up here. So let's go out to December.
that's right.
Yeah, let's go out to 20. Yeah, go out to 30 days.
Okay.
December 14th is fine.
Okay.
Um,
So we're looking at a 20 delta. This is what we
Yeah, let's
would
go
do,
to it.
just selling credit spreads right here. Okay. This
or
makes
you,
sense.
you'd sell a put here, of course, but yeah, so there, right there, that look what kind of premium you could get there. Now, if you wanted to get a little bit safer. Now, personally, where I would want to be if you went out, and this is a good example. Let's look at a
Oh,
chart. I can tell you where I would want to.
$327.
I
Wow.
would want to be. I would want to be at 350 on the SPY personally. Even with this great run up, if
Yeah.
we had a pullback, I would want to be below support. So I actually like 350.
Oh.
350s, there's not enough premium in there right now, in my opinion.
Right. Yeah. Yeah.
So you'd want to have a pullback, but I would want to be at least at
Oh.
360 personally on the SPY.
You wouldn't go higher than 360 is what you're saying.
No, I wouldn't personally.
Got it. And so as we take a look at the chart, let's do that for a second. You're looking at a day chart here, probably because of the 30 days out.
Yes.
You're saying 360, so we have like a trend line here at 379, 375. So you're being really safe, actually.
Yeah, I'm being really safe, and
Wow.
that's the point. But again, if the market pulled back, say that the SPY pulled back to 390 or 385, then I would be looking at 350, and I think you could probably get decent premium at 350. 360 would be fine. 360 would be fine, I think, but 350 would make me feel more comfortable personally.
And that's even if you don't have the shares yet, right? Because that's
right. This is to sell the put. You could keep doing this over and over and make. So that's what's great about the wheel. You can make money over and over on selling puts and never get assigned the stock. But what you'll find is when you do get assigned, and you start selling cover calls, that's where you really can make better income. That's what's great about the wheel. So if someone was bullish on the SPY, Sandy, they could sell at a 40 delta. You could go up to 375 or 380 and look at the options chain there and look at the premium you could get.
Yeah.
So there's different ways to go about it, but if you wanted to be safe, I'm telling you, 20 delta, 25, 20 delta is where you kind of want to be.
Now, let me ask you, for most of us that's never done this before, you actually, to sell puts like that, to obtain the shares, to get assigned, you either have to have the amount of money necessary in there, right? Because then it would be a cash secured put, or it would you would have to have enough margin and have the tier authorization. Is that correct?
Yeah, you definitely have to have the authorization level. And in the margin account, if you had a margin account and you were approved to sell puts, you would have enough cash or buying power. The way I would look at it, and this is really important. I was talking to someone in the channel. When you're selling options, you're selling short puts, and you're not using spreads. When you're selling short puts, so you're not covered, you want to look at it as a naked put. And you want to keep track of your notional value, because you actually have more buying power than what your cash is. And that's really, really important. So I would look at it as a naked put until you got assigned. Then you had sufficient buying power to buy the shares, and then you turn around and sell a cover call. But I wouldn't look at it as cash secured put. I would look at it more as you have buying power, sufficient buying power to take the shares. And believe it or not, there are people that will sell puts in a margin account that if they got assigned, they would not have enough buying power.
Wow.
That is dangerous. So that's why you want to keep track of your notional value. Forget about paying margin interest. You'd get a margin call in that situation.
Oh yeah.
So,
no one
so
wants
that. So anyway, I hope I haven't confused people, but it's really important to think about margin as naked puts. Keep track of your notional value, which just means if you got assigned on those 3 or 5 positions Sandy's talking about that we're simulating here, that you would have enough buying power in your margin account to take the shares and then turn around and sell cover calls on them.
Exactly.
That's really important to check your buying power.
So let me ask you this then, because now, this just brings up an issue of, well, wait a minute, if you really are, for the purpose of getting those shares, selling a naked put, and regardless, I think we'd have to ask the broker, either it's a cash secured put, or you would need that tier authorization. You think they'd give us that tier authorization? It's hard enough to get tier 2 authorization with spreads people are finding.
You have to have some experience, but typically to get into a margin account, if they give you a questionnaire and you answered it, you could get approved for it. It's not as hard as you think, but you do have to get approval. You can, to be safe in a margin account, you can just look at it as a cash secured put. I just want people to understand that you might be putting on a cash secured put, but in reality, your broker is only required a certain amount of capital to be held against that position. That's all I'm saying.
Right.
So if you want to think about it as, I'm just going to use my cash, that's fine. But just be aware that your buying power in your margin account will more than likely show a lot more capability.
Okay. And so that's like the first thing that you guys will probably have questions with is, if when and if you attempt to do this for real and not in a simulated account, if you don't already have the shares, that may be an issue if you don't have the authorization to be able to sell a naked put. Now, I know that, like in our Discord, we have a section in our toolkit that, allows people to really understand, for an example, what TDA is requiring when you answer all those questions. And a lot of people get those questions wrong because they don't know that options is really speculation, and that, options is really more of a growth item versus being conservative. Now, when you answer the questions for TDA or any, like your broker, for getting that, selling that put, that's tier 1 authorization. What's their, are you answering like you want to be conservative? It's almost hard for me to say it with a straight face.
I hate to say this, but you want to,
you're selling a naked put.
There are, at least at Schwab, there's like 3 different levels. So you can sell cash secured puts in a margin account. We'll just call it cash secured puts. You can get approval for that and not get approval for what's called level 3, which would allow you to sell naked calls, which you don't want to do anyway. So you don't need the highest level of authorization to sell cash secured puts in a margin account. So let's be clear on that. You can get approved for that. And I never even had really, you just fill out a questionnaire, and you might want to say that you have a little bit more experience just so there won't be any questions on it. But yeah, you got to be able to sell a cash secured puts. And quite honestly, my mom can do that in her retirement account. She had no experience to it, and Schwab gave it to her. So getting that really established in a margin account won't be difficult for you. But to get the capability of selling a naked call in a margin account, which gives you full access to do everything, basically, that's going to require some, more work.
Okay, so I'm going to have to investigate that so I can make sure that our people's got the info for that, because that's interesting. It's good to know because, a lot of people don't even know that you need authorization just to do a butterfly or a credit spread or whatever. So, okay, so here's the list of stocks. These are the ones we're going to pay attention to when we want, when the market is going down, because we then want to sell some puts so we can obtain some of these shares. So we'll probably do that in 3 to 5 as an example of these stocks in order to create basically a portfolio of shares. And we may not immediately create that portfolio of shares. We may just be creating income, waiting until we get put, right? Waiting until those shares, get put to us, so to speak.
You basically be growing your account with that premium that you've made on those 3 or 5 stocks. And that happens a lot.
Wow.
I would say that happens more often than you think. You're selling puts, you're selling puts, you're selling puts. Oh, now you finally got assigned. Now it's time to sell cover call.
How
So
interesting. I can't wait to start this process. So, okay, guys, we're all waiting then. We're not doing covered calls because we don't have any shares to do it right now. But I think the first step then, before we meet back up, so that you can kind of, because then you'll kind of know where everyone's at in regards to the market, where the market's at, where the levels are, to then start thinking about, okay, what's our cost basis? Because that's going to be the next thing, right? Is like to mentally start thinking about what's my cost basis. And it seems pretty easy now, 30 to 45 days out, you're going to set your profit target already to 50% once we end up doing this, and then wait till we get assigned.
yeah, and it looks like the market's pulling back a little bit right now, at least on the
Yeah.
Dow, at least on the Dow. So yeah, we'll get an opportunity and we'll do it. But you know
Okay.
what? Here's a good lesson. Be patient. Do it when it's the right time.
Right. Don't rush it. So
No.
I have a couple questions for you. Let's see. Pamela says, so we want to watch your list of stocks during earnings to take advantage of the swing up or down, correct?
Right. Yes, definitely.
Okay. And
Is that
so
so?
if you can just expand on that a little bit, because we were talking about some earnings plays on Disney as an example, and then we
Yeah,
didn't have as
so
many participants
yes,
and they just came in. So go ahead.
great question, Pam. Yeah, so let me be clear on this. I did not sell a put until after earnings on Disney.
Mhm.
I think it's dangerous to be selling puts before earnings. Now I know people do it all the time. I personally, unless again, I also have a dividend portfolio where I want to own the shares. Yes, I will sell puts before earnings in that scenario. But if you're just doing the straight wheel and you want to be safe, I would encourage people not to sell puts before earnings. What I did with Disney is it reported earnings, it crashed, and I
Mhm.
took immediate opportunity of it. The shares pulled way back, and I immediately sold a put on that morning, got really safe, and I literally just took it off for I think it was $164 profit.
Great.
Um, so and that was what, a matter of 5 days, I think.
Right.
So they can be a lot faster than 30 or 45 days. I hope that
Okay.
answers your question.
Yeah, because a lot of people, even right now in our Discord, when we get into a trade, and let's say the strike and expiration are in December, people are like, oh, are we really going to hold on to that? No, we're not. We're just we're giving ourselves time, and in our case, if we're buying calls, we need that time so that it doesn't eat into our premium of what we just purchased on that option. So. Um, yeah, sometimes that 30 to 45 days, you're looking out that far, but it doesn't mean that you're going to be holding it that long. Typically only a couple weeks, if even that. Okay, and then another question was thinking of building up my value in my account. Is it a strategy just for income to buy a covered call that I don't care about holding long term and get a good return by selling right at the money and just have it called away? Question mark. So that's
Yeah.
interesting.
Yes. So I think where she's going, yeah, yeah, you can do that. And that's my two strategies, right? I have one where I'm more strategic. I want to hang on to the shares, so I go way out in time, 4 to 6 months. I sell a cover call. I double my dividend amount. Or what we're doing right now with the wheel,
Mhm.
you can be you can look at it just strictly as a way to just get in and out quickly. You don't want to go far out in time. You don't even want to sell an out of the money call. You want to sell it wherever your shares got assigned. So if you sold a put on Disney, say at 80, and you
Yeah.
got assigned at 80, you could turn right around and then sell a cover call at 80 and get out of it. But you're going to make good premium doing that. So yes, you can do that.
That's so interesting. So many different variables to what you can do. I guess you just have to have the mental power to know how the wheel actually does work, so that you could take advantage of all these situations, right?
And everybody
Having
does it
knowledge.
different. Yeah, everybody has a different strategy. Like with me with Microsoft, I'm doing the wheel on Microsoft,
Okay.
and I'm going out of the money on that one because I'm more bullish on it. And I can you make money on the shares going up. When you sell a cover call out of the money, you're actually making money on the shares as well. So, it really, as we go through the simulation and you learn the
Mm.
mechanics, then you personally will develop your own strategy and how you want to do it.
Right. Right.
Yeah.
Well, I'm excited, and I'm kind of sad that it's not a down day, because I really wanted to simulate the selling of the puts to get the shares so that we could start. But I guess at the end of the day, I mean, this is what you do constantly. And until the time arises, it's, you're waiting for the best setup. And that's the best way to trade in any option strategy.
Exactly.
It says Coca-Cola looks like a down day. Is that enough? Is that good enough for us? So let's see. Coca-Cola. You told me to take a look at that, huh?
Yeah, actually, that's one of the reasons why I should pull it up, because so if you pull up the daily chart on it,
yep.
I would personally want to enter a position of Coca-Cola right around $55 on that. If you go back to look where it was in October, it got down to 54. So I would want to be right around 55, but you could sell this is one where you could sell a put on Coca-Cola because it is a down day, but I would want to be at the 55. So if we pull up the options chain, let's go ahead and do that.
But is this down enough? I mean, it's only 71 cents. Is that?
Well, it's down 1.19%. So, I mean, it's not significant, but you got to remember, this is Coca-Cola. So you're not going to have this thing doesn't go down like a lot of stocks. So, but I would prefer to have a combination, selling Coca-Cola, a put on Coca-Cola on a down day, but also having the VIX being higher. Right now, the VIX is going up. Have you seen that?
Yeah.
And I think one of the reasons why is I think we might have had a missile strike while we've been on this call. I think there's some misinformation, whether it's Poland or not. But I think that might be one of the reasons why we're seeing maybe a little bit of a downturn. But yeah, with Coca-Cola, it'd be nice to have that VIX get higher and then have Coca-Cola right around $58, and then you could sell a put at 54, 55. But and then I personally, what I would do with Coca-Cola is I would scale into it. I'd leave room to do another 100 shares, and you could build out 200 shares in Coca-Cola because it's not a real expensive stock. That's the nice thing about it. You could have $11,000. So this is one we could simulate.
Yeah, let's just walk that through, because as my mind is just thinking about what you just said about doing it in 2 lots like that, can we just, as if we were going to sell it, if we were to go to the trade tab, you're going to be going, let's see, we're going to go out the 30, 45 days.
Yeah, let's go out to 38 days, see what that looks like.
Okay.
Split the difference.
And we're going to go to the 20 Delta put.
Let's go to
so that'd be
see the premium isn't that very good, right?
No.
So that's kind of what I'm talking about. You'd have to be like it
higher.
You'd have to be like at 59. You need the VIX to be higher, or you need a bigger pullback. See, if you did, and I would be fine with this because I like Coca-Cola, but if you did a put on Coca-Cola, say at 59, you'd get pretty good premium. That'd be a good return. But there's a chance that thing could pull back to 54 or 55. So what I'm saying is you would want to leave room to build out a position here. And that's what I would do. But I would wait for a bigger down day personally.
And when you say, 100 shares, so we're just talking, if I was going to do that in tranches, like what you were talking about, I would just sell just one then, because. Right.
I would sell one. And then if it pulled back, say a month later, you get assigned at 59 and it's trading at 54. Then what you could do, you could buy shares at 54 plus 59. That's your average cost basis would be 56.50. You'd have 200 shares. You could sell 2 cover calls at 56.50 and bring in really good premium at that time. And the premium would be different at that point in time. So
you can just think about that.
So that's how I would probably do Coca-Cola. I would do it in phases. I would have for me, because of my account side, I would have 400 shares, but for someone with 30 to 50,000, you could do 200 shares pretty easy on this.
Interesting. Would you recommend it now or still wait till the VIX goes higher? Probably
I
till the
I
VIX
would
goes
wait a little
higher,
bit.
'cause- yeah, because this is not, when we look at the 20 delta, so to speak, it's just not enough premium. And is there a
Exactly.
minimum premium? Are we looking, like what in your mind was minimum to you?
Yeah, I think I try to at least get $100 for
Got
everything
it.
that I sell, just so you
Okay.
know. And then I start there. I mean, like we're talking about lower capital here, so $91 may not be horrible, but in fact, let me just look at that 91, just so you would know,
I could probably go out longer. You think going out longer here? Let's go 45.
I probably wouldn't go out longer than 45
Yeah.
days. Yeah, you could go 45. See that like 58, you could get, say you get $103 on 45 days. That would give you a return of, 14%, annualized return, because you're taking the premium you received, dividing that by the days you're in, expiration 45 days, and you're
Right.
multiplying that by 365. Because you can repeat this trade over and over and over, right? So that's how you do that. But yeah, I would want to be in the $100. I wouldn't want to be at 89 or 82 personally.
Okay. And if you're buying it, or, if you're selling your put at around 59 as an example, in this example, if it goes down, if it passes your strike, you're going to get put those shares at 59.
Now, the other thing you could do, we haven't talked about,
Yeah.
you could go to 55 now and sell 2 puts, and that would be $81, right? But that to me, again, isn't the best. It just isn't the best premium.
Am I in the right spot, by the way? I'm under 38 days. Where are you
Yeah,
at?
45. I thought we were going to go. I mean, I'm basically looking at what you
I
thought you
just
were going to
wasn't
go.
sure. Okay. And where were you at here when you said you could do 2? Was that at 56?
Yeah, I'm just saying you could, like
Ah.
56, you could get 120, right? Potentially.
Yeah.
Maybe more like $55 between the two. $110 for 2.
Okay.
But this isn't the best day in my opinion.
Okay.
And
So
I do think I think we're going to have, we're primed for a pullback. The market's been pretty hot here.
yes, it has. It has. So, okay. So we're going to wait, guys, keep it in mind when we get a pullback, we'll advertise it in the Ask Sandy as well as in the Wheel Strategy. Keep your eye on it. We'll jump on a Zoom. We'll start selling some puts in a simulated account and see if we get some shares. And if we don't, then we're going to grow our account and just earn income off of it, because we talk a lot about that as well. So, Rich, thank you so much. Really appreciate it. And I'll create that channel for you so you could start posting some information that doesn't get lost in the chatter.
Thanks, Sandy.
Hey,
All
Sandy,
right.
there's a couple
Yes.
questions in
Oh,
the
thank you.
chat.
Thank you. Hold on, Rich. You can't leave yet. How do you
Okay.
determine so when we talked about Coca-Cola, how do you determine the strikes like KO, why 55? So we're talking, why did you choose 55 on the 45-day December?
Well, because if you go back to last month, it got down to 54. So that's support level.
He's
So
just
like if
looking
you,
at support.
yeah, just
Okay.
basically looking at support. So what are the so, and I'm being more conservative with this, right? I'm not saying, like, if I wanted to own Coca-Cola, I mean, I'd be fine at 58 or 59 if I wanted to own this in my dividend portfolio. But I'm just saying, doing the strict wheel like we're talking about here,
Yep.
yeah, you'd want to be more at support levels.
Okay.
So that's how I came up with that.
Sounds good. Let me see what other questions we have. So Morningstar FV says $58. Do you use that info in your levels? Morningstar
Yes.
FV. What is that? FV.
Fair market value, is that what they're talking about?
It might be. Yeah.
Yeah,
FV.
yeah, I definitely do. For
Oh,
my long-term dividend portfolio, I look at 4 or 5 different sources and look at discounted cash flow analysis, and then look at where they believe the fair market value is. Now you might have And if you have more of a consensus, and this is something to think about. So if you have more of a consensus with Morningstar and some of these other,
Mhm.
Bank of America and those that are determining the fair market value, or where they think the value of the stock should be, whether
Mhm.
it's reasonably valued. If you have more consensus, then that gives me more confidence that
Yes.
you have a better, like right now. I mean, you had what, Bank of America, I think, upgraded Netflix to 370 today. You
Mhm.
know, that doesn't mean they're right. So
Mhm.
you gotta look at that, and I try to arrive at a consensus.
Now, are you looking at the fair market value as 58 in this scenario as support, or are you looking at that as a good place to sell a put? Like in your mind with the strategy, how are you utilizing that information?
Yeah. So again, if I, long-term dividend portfolio hold, yes, I'd be fine with Coca-Cola at $58. But doing the wheel no, probably not.
Okay,
So it's two different strategies.
got it.
Um,
It's good to know because I am a dummy when it comes to the wheel strategy. I'm perfect. The wheel strategy for dummies, I'm asking those questions. Hope you don't mind. Do
no,
you
no,
look?
no, no. It's important because, um, you know, if everybody has a different strategy and everybody approaches things differently. So
Exactly, just the learning process, trying to wrap my brain around it, right? Do you look at value? Do you look at volume and open interest to sell a put?
yes, I do. I mean, I do, but typically the tickers and the stocks that I've chose have pretty good liquidity and premium. Like, pull up IWM
Okay.
real quick. This is a perfect example of one that's, you're not going to find a more liquid. This is like the SPY. This is a really liquid options chain here.
Mhm.
And so, yeah, I think it's important to sell where there's liquidity. But I'll be honest with you, some of that can be a little bit overdone. Just because something doesn't have a significant number of contracts, or the volume, that doesn't mean, as long as you're getting, I think what's more important, as long as you're getting the price and the return that you want on it.
So this
Um,
looks pretty good for 30 days out. You're looking at $193 for
that's
wow.
IWM's a good one.
Ooh,
This is a great one. This is one of the better ones that you can sell puts on. It's one of my favorite ones to trade. Now, this is a small cap universe. And on a really good down day, you can get way out in time and get really safe. You can get to a 20 delta and bring in really good income.
interesting. Yeah, because this
Yeah,
is
this
at a
is a
nice
great one. This is probably
investment.
the best one I
Yeah.
shared with you.
Oh, is that right?
Oh
IWM
yeah.
people, write it down. IWM selling puts.
I mean, if
Oh,
you're just doing the wheel,
yeah.
in my opinion, the indexes are the way to go, or the sector funds.
Interesting.
They're just tough to beat.
For the premium value?
Yes, for the premium and getting safe and
Oh,
bringing in income. Individual stocks, there's more risk, right?
yeah, that's true.
Because
There's more vol-
tomorrow Coca-Cola could announce that, you know, Pepsi's better than they are. What do you
Right,
what do you think's going to happen to
right,
the stock?
right.
So it's better to be in the indexes. It's better to be in the sector funds if you're
Oh,
just
that's
doing
it.
the straight wheel.
Right. Back in the day when I learned how to sell credit spreads for income, that was one of the big highlights was you only stuck with the ETFs, believe it or not.
It's
Now we do
smart.
it with everything, but same justification as you're talking about right here.
Yep. And the other one that I talked about on the video, XLC, to me, it's a sector fund. It's a little high right now. Um, I'm actually at 52.35 is my cost basis, and I'm making $300 a month doing this one. But this is a good one to wheel too. You could build out 200, 300 shares in this one too. So anyway, so yeah, IWM for liquidity, you can't beat it, and
Okay.
for getting safe.
Okay. Good info. Let me see if there's any more questions. I appreciate it. Okay, guys, so we're going to check back in here for selling some puts on some of these quality ETFs and stocks when the market goes down. So we'll see you when that happens. Guys, thank you so much for coming. This was so educational. I really do appreciate it, Rich. and we'll talk to you
bet.
soon.
Yeah, bye-bye.
Okay, bye-bye.